Once again, so welcome to this session. And today we shall be able to look at lesson number 15, lecture number 15. So remember the first purchase cycle that we did, which was purchase cycle part 1, was on lecture 14. So I'm still going to continue with this purchase cycle. Yeah. So I'll be taking you through purchase cycle part 2. Yeah, and remember the concept is risk. What could go wrong when we are going through our purchase cycle? What do we need to do to ensure that nothing goes wrong? So that means that what controls do we put in place? Yeah, to ensure that we procure right amount, right quality, what has been ordered within the organization, and we make a proper payment. And then, of course, now we have the auditors test procedures. When you hire us, for example, you have hired Aura and Co. Then how do you, in this case here, what will you be able to do to see whether these controls are working, to see whether these risks have been mitigated? So remember, this concept is very, very nice, yeah, effective for those students who are doing CPA, ACCA, yeah, audit and assurance, both at the intermediate level and at the advanced level. The topic is internal control. Now, introduction. First of all, we start with the reminders. The purchase to pay cycle involves several stages where errors and risks can emerge. The auditor's role, remember, ladies and gentlemen, the auditor's role in any control systems. We are not charged with the responsibility of designing and implementing internal control systems of our clients. No. Our role, ladies and gentlemen, as pertains internal controls of any entity that we audit, is to ensure that we understand, as the auditors, we understand the controls. We document them. We shall document them. All right? From there, we shall be able to evaluate the design. Was the design of those controls okay? All right? And then, of course, we shall be able to now test and see whether for sure they're effectively helping this organization to meet its objectives. So, ladies and gentlemen, please remember, let me just share this back, that the auditor's role as pertains internal control systems is to understand the whole process, the whole controls. We have to document this. Then we evaluate the design of internal controls. Then we test the effectiveness of these controls. And ladies and gentlemen, depending on the findings that we shall be able to get, if we shall be able to identify a few weaknesses here and there, then through the management letter, after we have given our audit opinion, we shall give what we call a management letter, which is a letter of advisory, where we are advising the management and telling them that, hey, you RCM College, you are saying in this case that you have a control of putting a soldier at the very gate so that this soldier is able to just allow students who have paid fees in full to do what here, to enter classes. That this soldier now is the one who is helping you to do what here, to collect your fees. All right, that's a control you told me. I documented it. All right. So first of all, I understood it as an auditor. I documented it. I tested, in this case, the design. And of course, I have evaluated the effectiveness. But I'm giving you in the advisory, this management letter, I'm telling you that your control is not working. Because when I was testing it, I went at RCM gates, very near at the door, without that soldier knowing what my intentions were. I can even do the surveillance, from very, very far away. And then, of course, I could see that this soldier, is a human being. All right. Anytime in this case here, a very pretty girl passed around by wanting to join classes, she could only, in this case here, smile to this soldier, and the soldier could smile back. And then the girl, in this case here, got to classroom without showing what here, without showing. So basically, I'm telling you that this control is not working. This control is not working. All right. So then the role of the auditors, we are not coming to put in controls for you. We shall just be able to evaluate the design, test the effectiveness, and then, of course, we shall be able to advise you accordingly. accordingly, because we'll tell you in this digital era, why do you want to put a soldier, there to manage your fee payments? In this digital era, I have in this case here cards. Yeah, a card system where any student who has, of course, cleared the fees, you give them a card, and this card, they should be able to come and swipe on a machine that you have at the gate. If he has cleared the fees, then this machine should be able to open up. The door should be able to open up. All right, we shall overcome. We shall overcome. Great, we shall overcome. Now, ladies and gentlemen, I hope that is very, very clear. The final stages of the purchase cycle, starting from receipt of goods to payment of invoice, require thorough understanding to identify what could go wrong, you as an auditor. The control objectives, controls, and audit procedures. Now, purchase to pay, purchase to pay, purchase until you move through that cycle where you pay. Now, remember we did stages 1 and 2 in lecture number 14. So this lecture number 15, which is a purchase cycle part 2, I'm going to look at stage 3 to stage 5. And specifically, I'll be looking at risks, what could go wrong, what are the control objectives, the controls, and then on the other side of the coin, I'll be bringing in an auditor who will be able to put in his audit procedures and advise the firm accordingly. So then a reminder, recall. Remember, ladies and gentlemen, whenever you want to place an order, you want in this case here to buy, for example, as at RCM, you want to buy in this case here, for example, marker pens. So we must have people or a person or a department that should be able to raise what we call a purchase requisition. They are requesting, we want a marker pen. So we have a purchase requisitions, in this case here, which could be in the form of what here? A bound document, which has got these PRs, which are sequentially pre-numbered. So somebody just tears like this, and then they write, I want marker pens. And then they take to their head of department. The head of department should be able to approve by signing. Now, after that, now the head of department, of course, will be able to take these straight away to the procurement department. So the procurement department, their role is to place an order formally. So they'll be able to look at the kind of suppliers they have on their approved, pre-approved list. And then in this case here, they raise a purchase order. Once this supplier gets a purchase order, they'll be able to bring goods. As they bring goods here, the warehouse master should be armed with what we call a goods received note. A goods received note. Where in this case, the goods received note should also be pre-numbered sequentially. So we shall be able to get this goods received note showing in this case here what is the name of the item, the quantity procured, the quantity we ordered. Then we have in this case here quantity received. If there are any discrepancies, this person should be able to make comments there. And then, of course, at the end of the day, the person receiving must always sign. Now, remember this GRN, what we call the goods received note, is what will be given to the finance department. So the finance department will be able to now raise what we call an invoice. Not raise, but they will be able to, when this GRN is given to the finance department, all right? So we expect in this case here, the supplier here to raise an invoice. Now, please listen. This cycle, you must understand it very well, you as an auditor. If, for example, you are the one who is in charge of, the procurement here, then as you raise your PO, you must always be having the purchase requisition. So here, 2 documents have been born. The person receiving here, as you prepare your goods received note, you should be matching your goods received note with the PR, purchase requisition, and the purchase order. These 3 documents will be put together, plus the invoice now that has been raised by the supplier and given to the accountant. So the accountant will be able to prepare a check. Underneath the check, we expect support documents. Purchase requisition has to be there. The purchase order has to be there. The goods received note has to be there. And then now this guy will be able to as he prepares his payments voucher, he should be able to explain to the signatories what is happening. So it means that those other documents must really be matched. So as an accountant, as an auditor, you must understand this cycle very well, because it is out of this cycle that we shall be able to put down our internal control system. So I start with the stage number 3. So, and you must also understand the key documents. Ladies and gentlemen, I've been in this business of examining, or rather marking, CIFA exams, and of course, other international exams. What I know, most students in this case here fail this AA or AAA because they don't understand the methodology of doing these exams. If you don't know the key documents required at each of the cycle stages, you will never pass. Because as an auditor, we expect you to be asking for those documents to review them. So if you don't know the names of those documents, then you will keep on, in this case here, failing. You'll keep on failing semester 1, another semester, and then you think that you've been bewitched. Nobody has bewitched you. You have never taken time to understand the documentations and then to understand like what is the role of the auditor. Because you see, in most of these exams nowadays, they will give you what we call a case question. The case question is very, very practical. And then they will tell you, assume that you are the audit manager. So now an audit manager who does not know goods received notes, who does not know even the process of making payments. That is why, as I teach you, and that is why I love auditing and assurance. Because here you will get to understand how businesses operate. If you want to understand how business operate very well, then do always auditing. You can never go wrong. All right. So, ladies and gentlemen, let me continue. So then when we are receiving goods, of course, we expect to have what we call a goods received note as the key document. Then now you come and ask yourself, ladies and gentlemen, what in this case here do you think could go wrong? What do you think in this case here could go wrong? What is the risk? So the risk here, and remember there is no right or wrong answer. It's how you argue your case. So when I'm receiving these goods, what could go wrong? I could easily, ladies and gentlemen, get goods that I never ordered. So different goods. I could very easily record wrong amounts. This person who is counting, so I see a risk there. The quantities, the figures could be wrong. All right. So then when I realize that there are these risks, the dangers, what could go wrong, then I must discuss the control objectives. I must come here and discuss, I must come here and discuss the control. If we put in controls, what do we expect? We expect in this case here to receive the very quality of goods that we asked for at the right quantity, at the right price. All right. So allow me to read some of these things for you to be able to understand. But anything you write, and so long as remember you use a table, don't use the narrations. Always use this table. Auditing, if you do an auditing exam without drawing tables like this, you'll always keep on failing. Always. Always. So we have here receipt of goods. The key document is goods received note. What could go wrong? Purchases recorded in wrong amount or wrong account. Even wrong account, yes. So then the controls that we shall be able to put in as a firm will be able to ensure that purchases are recorded accurately in the correct amount and the correct account. Ladies and gentlemen, what is the control activities that you expect here? Then as an accountant, remember we said, when you receive these goods, you shall debit, if they are goods for resale, you shall debit purchases account. And remember here now you have not paid, so you credit accrual account. And that is why the very best control activity to be able to mitigate these wrong issues, ensure that you are casting. That is the right term we use. You cast the figures in the GRN and trace them to the accrual account. So do a GRN and accrual reconciliation. That by itself is a control which will be able to ensure that we don't have misstatements in our financial statements. So remember that all this risk assessment, etc., these ones are being done by the organization. You as an auditor now, the audit test procedures. Remember, ladies and gentlemen, whenever you talk of audit test procedures, there are things you're supposed always to remember. As an auditor, if I'm doing, like, for example, what we call substantive tests, yeah, the test of details, we shall be saying that our tests are normally 5. We normally call them R-A-E-O-U. R-A-E-O-U, where R is the analytical procedures. That's a test. Yeah. A is inquiries and third-party confirmations. E is inspection, I. R-A-E-O-U. I is inspection. O is observation. I must observe many things. Observation. The U, at least there is a U in that word, we call it recalculation, but recalculation doesn't come alone. We normally talk of recalculation and reperformance. I repeat, R-A-E-O-U. I is analytical procedures where we do ratio analysis and observe the trends. That is R, analytical procedures. R-A is inquiries and third-party confirmations. All right? I is inspection, where you are inspecting documents. O is observation. Yeah, for example, as an auditor, as these goods are being received, I will one day go and sit somewhere strategically and not inspect, but observe. For example, the offloading of documents. Not documents, but the purchased materials, offloading. Yeah, who is doing the counting? So, for example, if I realize that the person doing the accounting is just the supplier, I'll know there's a problem. The person who should be doing the accounting should be our people. Yeah, and then confirming the same with the suppliers. Yeah. Yeah. So I need to observe. Then I'll need to do recalculations. At times when they tell me that I've done these reconciliations on a sample basis, I would want to see how effective they were in terms of reconciliations. All right. So then we'll be seeing ourselves in this case here. For example, I would want in this case here to review the goods received note as an auditor. That's an audit procedure because that is under inspection. I would want to check whether reconciliation is being done very well. That's a procedure. But now remember, when I'm testing controls, I'm not getting into what we call test of details. I'm doing these substantive tests, but at a very narrow. We don't get into depths. Very narrow. I'm simply checking. All right. Because still I'm at the stage of assessing internal control systems and see whether I will be placing reliance on them if they are strong. If they're not strong, then I will be able to say, no, your controls are weak. So I'm going to do the test of details. Now the substantive tests full scale. All right. Now please listen, please listen, please listen, please listen. So we are looking at the audit test procedures. Obtain the GRN accrual reconciliation, obtain it yourself. Yeah. So whenever you talk of reconciliation, then you must always also review something else. Yeah, of course, ladies and gentlemen, whenever reconciliations are being done, we will not be able to tie up everything. There shall be some loose ends that this document and these figures are not matching. So then as an auditor, I will be concerned with the length that those open cases will be left without a solution. Yeah, the open cases, these are areas that were not matching. The CFO, was the CFO able to follow through to see whether everything in this case now was reconciled, and what duration did it take? All right, what duration did it take? All right, so ladies and gentlemen, I'm almost finishing. I promised you 30 minutes. Yeah, so in this case here, review follow-up actions on reconciling or non-reconciling items. Yeah. Yeah. So follow-up actions, what was done? If there was any discussions, because you see, when they're doing reconciliations, most of them will make minutes. Yeah, these are agreed, but I mean, the invoice numbers were not okay, etc. So we must always do that follow-up. Now, when we are receiving goods, there are many things that can go wrong. Reconciling items not promptly, actually I've explained this, reconciling items not promptly resolved. Actually, it should be non-reconciling items. Yeah, non-reconciling items not promptly resolved. The control objective here will be to ensure reconciliation is meaningful. If we are not reconciling, if we are not getting a solution to non-reconciling items as fast as possible, then the entire reconciliation will not be meaningful. All right? Then in this case here, what will be the control activity? Remember, this is the control objective. And the control objective, I told you must start with the word to ensure the reconciliation is meaningful. Then the control activities monitor age over non-reconciling items. I don't know why this thing was leaving none. Monitor age of non-reconciling items. Resolve items older than standard days. If none, for example, reconciling items, ladies and gentlemen, are not resolved for a whole year, then we know that there is a problem. We know that there is a problem. Then as an auditor, what will I be doing myself when I'm now called, come and look at this risk, look at the controls that we have? So for me, I will investigate all old, please here, it's non-reconciling. I will investigate all old non-reconciling items and assess timeliness of resolution. If in this case here, we are not really prompt to address any non-reconciling issues, then there is a problem. Then we go now to step number 4. We are almost finishing. So remember now I've received the goods, right? The next thing, of course, is to receive the invoice from the client. Yeah, the key document here that I should be able to know is the invoice. So the risk, what could go wrong? What could go wrong, ladies and gentlemen? We have always seen these very, very many times. You will get to have been invoiced. So when you are invoiced, we are supposed to post this invoice amount to the correct supplier, to the correct account payable. In most cases, we may post this invoice to a wrong account. Even if we post it at the right account, there is a possibility, ladies and gentlemen, that we may post wrong figures. That's a risk. Yeah, that's a risk. And remember, risk, you can say anything. So long as you're good in business, so long as you understand business language, this risk, you can say anything and you'll get it right. We've never given people any wrong here. Whenever they write points and they're able to defend themselves, they're always right. So invoice posted to wrong account or even wrong supplier. So then if we have controls, what will be the objective? So the objective now, you speak on this. The objective will be to ensure that the invoice is recorded in correct amount and supplier account. All right. Ladies and gentlemen, from there, then what controls will you be able to put as an accountant to ensure that this is done very correctly? This involves amounts. So the best control is regular supplier reconciliations. Yeah, just always ensure that you are reconciling these accounts payable, AP. And when you are reconciling accounts payable, of course, we shall have the individual client's ledgers. But we must trace the same to what we call the GL, the general ledger. Yeah, and the moment you start saying that kind of language, I'm casting these figures, I'm tracing this to the general ledger, automatically the examiner knows that he's dealing with a very, very bright student. A student in this case, you know, who understands business language. Because in audit, if you don't understand the business language, don't choose the paper. Especially at the advanced level, don't choose it. Don't choose it. But again, if you don't choose it, and you guys are becoming CEOs very soon, how will you be able to survive as a CEO and you don't understand the cycles of things? It is only in audit that you can easily get that concept, ladies and gentlemen. So then as an auditor, Now I'm on the coin of the audit side of the coin of the auditor. So as an auditor, I will obtain sample supplier reconciliations, review follow-up on non-reconciling items, review follow-up on non-reconciling items. If non-reconciling items are not being followed up, then I know there is a big control weakness that I should be able to report on the management later. What else could go wrong? So many things can go wrong. Invoice received for unordered goods. Yeah, especially when there is collusion. Yeah, so if we have a control, then the control objective here will be, if we don't want to get into this problem, to prevent payment for goods not ordered. Ladies and gentlemen, you as an accountant, what are you doing? Because you see, you as an accountant, as a CFO, you're the one who is going to put in controls, right? The very best control activity or action will be to match invoice to goods received note. Yeah, match invoice to goods received note. Yeah, this is a form of reconciliation. We're checking the invoices versus goods received notes. And then, of course, you will be able to introduce this concept of signing off. Goods received notes must be signed off by supervisors. Invoices should be signed off by supervisors. All right. So they sign off before approval. That's a very, very good control. Then now from there, ladies and gentlemen, what are the audit procedures? Those RAOs. Yeah. So of course, now you start asking for these documents. Check invoices for goods received not match and the signatures. Verify the authorization process. Very, very easy. Once you get used to this, you like this subject crazily, because anytime you go for interviews, these are the kind of things that will be asked. Yeah, because who doesn't want control systems in their place? Then, ladies and gentlemen, we have here another weakness. Invoice not received for delivered goods. Invoice not received for delivered goods. So perhaps the supplier has just put in his materials there, his goods there, but he has not given you an invoice, which is also very bad because you'll be having cash flows in the bank and yet you're supposed to having, paid. Yeah. So then the control is to ensure invoices are received for all goods delivered. Then what control activities do we have? Periodic review of goods received notes without invoices. Match and the follow-up with suppliers. Do, in this case here, a supplier's circularization. Yeah, try to send suppliers statements to them. And then, of course, as an auditor, I will be able to sample. Now here we are looking at this as auditors. The audit test procedures. Yeah. So in this case here, sample GRNs without invoices, check for evidence or follow-up and explanations from management because of the inquiry. Yeah, inquiries. Yeah. Remember when we talk of inquiries, and I'll be able to help you know how to expand this. So you're not just talking to management internally in terms of inquiries. No, as an auditor, just ask for permission, in this case here, and do a supplier circularization. Talk to your suppliers. Talk to your suppliers. Ask them, are you aware of this amount? Are you aware of these goods which were delivered here? I mean, I could write so much, ladies and gentlemen, in this regard. Now, after that, ladies and gentlemen, we have here number 5, the last step, which now is payment of invoice. So payment of invoice, of course, I will pay this by raising a voucher, a payment voucher, against an invoice. So I need this. What could go wrong? Wrong payment, amount or account, or even a missed payment. So if we have control activities, the control activities objective will be to ensure accurate and timely payment. And remember now, here as an accountant, as a CFO, you shall do a 3-way match. You look at the invoice raised or given to you versus goods received note versus purchase order. Yeah, these are very good control activity, 3-way match. ensure that all invoices are stamped as paid. Every time you pay an invoice, it must be stamped, paid. Yeah, after payment, always stamp them. So then on the other side of the coin, when I come in as an auditor, I will ask for all the stamped invoices. Of course, they can't be all of them. I can go for a sample. And then I'll be able to review the stamped invoices. Confirm payments made through the bank on a sample basis. Yeah, so if you're telling me you paid Dr. Aura here, I'll ask for the bank statement and look for Dr. Aura and see whether the payment was made. Investigate overdue stamped invoices. Investigate overdue and stamped invoices. Remember, ladies and gentlemen, it will be very important for us to ensure that we pay our suppliers within how many days? Within 30 days. The moment you start as an auditor realizing that, hey, this invoice is going, say, to 60, 70. Of course, we have the aging register, fine. But even if we tell these people we're going to pay them after 60 days, it's not proper. Good companies pay within 30 days or even promptly. All right. Of course, you would want like kind of a soft loan. But at the end of the day, ladies and gentlemen, the earlier you pay, the better. The earlier you pay, the better. The earlier you pay, the better. Yeah. So anything else that could go wrong? Yeah. Wrong accounting entries. The control objective here will be to ensure payments are posted to the correct general ledger and the supplier account. Yeah. Control activity will be to perform bank reconciliations because now here we are involved on issues to do with payments. So you do bank reconciliations and supplier account reconciliations. As an auditor, I will obtain sample bank and the supplier reconciliations. And of course, always talk about this. Ensure open items are cleared promptly. So the key thing that I would want you to be able to know here, key reminders for internal control evaluation, always ensure that you understand the process, document the process, evaluate the control design, test control effectiveness. So now this brings me to lecture number 16.